Have you ever scrolled through business for sale listings and wondered who actually buys these places? You see dry cleaners, coin laundries, and local diners. It sounds like the classic dream of autonomy, buying a stable, cash flowing asset and instantly becoming your own boss. But when you look under the hood, the financial reality is often much more complex than just writing a check and collecting the profits.
It really is. A lot of people approach small business acquisitions as if they were buying stocks, expecting to sit back and watch the dividends roll in. In reality, buying a small business is often closer to buying yourself a full-time job. Today, we are looking at a very specific case study that illustrates this perfectly. It is an established tanning salon in Stark County, Ohio, currently listed for $124,900.
A tanning salon in Ohio. That sounds interesting. On the surface, the numbers look quite clean. The listing shows that in 24, the revenue was just under $116,000, and the seller's discretionary earnings, or SDE, came in at around $34,400. For someone looking to dip their toes into business ownership, that asking price seems relatively accessible. But what does that $34,000 SDE actually mean for a potential buyer?
That is the pivotal question. Seller's discretionary earnings is a metric used in small business sales to show the total financial benefit a single full-time owner-operator would take home. It includes the net profit plus the owner's salary plus non-cash expenses like depreciation and any personal expenses run through the business. In this case, the owner's discretionary earnings of $34,000 includes several add-backs like personal vehicle use and some one-time legal fees. So, if you plan to run this salon yourself, working the counter, managing the inventory, and cleaning the beds, you can expect to make about $34,000 a year.
Which, let's be honest, is not a massive salary to live on. If you quit a corporate job to do this, you are taking a significant pay cut. But what if you don't want to work there? What if you want to hire a manager to run the day-to-day operations so you can treat this as a passive investment?
That is where the math gets incredibly tricky, and it is actually highlighted in the financing pre-qualification documents for this deal. If you try to get a standard small business administration loan, the lenders are going to look at whether the business can support both a manager's salary and the debt payments. The industry standard estimate for a replacement manager's salary for a business like this is around $40,700.
Wait, if the manager's salary is $40,700 and the total discretionary earnings are only $34,400, then you are actually in the negative.
Exactly. You have a negative cash flow of about $6,200 before you even write a check for the monthly loan payment. Because of that, a traditional SBA loan is basically off the table on a trailing basis. The business simply does not generate enough cash to pay a manager and service the debt. A buyer would need to bring money from a traditional loan or a home equity loan or look into a ROBS program.
ROBS, that is the rollover for business startups, right? How does that work in a scenario like this?
It allows you to roll over funds from an existing retirement account, like a 401k or an IRA, into a new business entity to buy the business debt-free. You do not pay early withdrawal penalties or taxes on that money because it is technically invested in your own company's stock. It is a powerful tool, but it also means you're putting that portion of your retirement nest egg directly into that local tanning salon. If the business struggles, that part, OG or retirement savings, go down with it.
That definitely raises the stakes. But let's look at the positive side for a moment. One number in this listing absolutely jumped out at me, a 96.4% gross margin. That is astronomical. Most retail businesses are happy with 50%. Restaurants struggle to hit 70%. How does a tanning salon achieve 96%?
It comes down to the business model. Tanning salons are service heavy. Once you buy the tanning beds and sign the lease, the actual cost of delivering a single tanning session is almost zero. You are selling electricity and time. The cost of goods sold, which in this case is mostly just tanning lotions and minor retail products, is tiny compared to the service revenue. 89% of their income comes from prepaid packages. Customers pay upfront for a package of sessions, and many of those sessions might not even get used. It is a highly predictable recurring revenue stream with almost no variable cost.
So the margins are great, but the scale is small. You are operating in Stark County, Ohio, which has a population of around 370,000 people. The listing mentions that the current staff consists of 3 to 5 employees. It seems like a very localized, stable operation, But how does a new owner actually grow a business like this to make that $34,000 profit grow to something more attractive?
The listing actually points out a few clear avenues for growth. First, retail merchandising is currently underdeveloped. Right now, they sell packages, but they aren't selling a lot of high-margin tanning lotions or accessories. If you can train the staff to upsell products to every customer who walks through the door, you can boost revenue without increasing your fixed overhead.
Red light therapy has become incredibly popular lately. It is all over social media for skin health and wellness.
It is a massive trend. By adding more hybrid UV and red light systems, you open up the salon to a completely different demographic. People who would never step into a traditional UV tanning bed might visit weekly for red light skin therapy. It allows you to charge premium prices for a service that fits perfectly into the existing footprint. Plus, they currently do no digital marketing or paid social ads. It is all walk-ins and word of mouth. In today's market, a basic local digital ads campaign could drive significant new traffic.
It sounds like the current owner is just running it on autopilot while focusing on another venture, which is why they are selling. They have set up the foundation, configured the salon management software, and built a loyal client base, but they aren't pushing the envelope.
That is very common with businesses of this size. The owner reaches a point where their attention is divided and the business plateaus. For the right buyer, that plateau is an opportunity. You are buying the infrastructure, the equipment, the lease, the active client list, and the staff for a fraction of what it would cost to build from scratch. And you do not have to go through the painful, unprofitable startup phase.
Right? Because the startup phase for this salon in 23 actually showed a net loss of over $16,000 due to legal fees and depreciation. It took until 24 to become profitable. By buying now, you skip that initial pain. But it still brings us back to the central dilemma of small business acquisitions. Are you buying a business or are you buying a job?
It is a classic trade-off. Although this business is semi-absentee already, if you buy this salon and begin working there 40 hours a week, you are earning a modest living while building equity in an asset. If you can successfully implement those growth strategies, adding more red light therapy, boosting retail, and optimizing the operating hours, you might scale the cash flow to $50,000 or $60,000. At that point, you could hire a manager and still have a slice of profit left over for yourself. But it requires active management and real entrepreneurial effort. It is not a passive stock portfolio.
It really highlights the difference between being an investor and being an operator. You have to be willing to roll up your sleeves, manage 3 to 5 employees, deal with broken bulbs, customer service issues, and local marketing.
Absolutely. And you have to look at the market context. Nationally, the median asking price for a tanning salon is around $157,000 on revenue of over $220,000. So this Stark County listing is priced below the national median, but its revenue is also lower. The multiple of 3.63 times SDE is on the higher side of the typical range, which usually tops out around 3 times. The broker is justifying that higher multiple because of the strong gross margins and the clear upward trend in revenue, which is projected to reach $140,000 in 26.
It is a fascinating micro-study of Main Street capitalism. It shows that even a small, seemingly simple business like a local tanning salon has a web of financial, operational, and strategic questions that a buyer has to navigate. It is not just about whether people want to get tan, it is about debt service coverage ratios, tax structures, and product mix.
That is the beauty of it. Every small business has its own unique puzzle. The numbers tell a story, but the success of the business depends on the operator's ability to read between the lines and execute. Whether you are looking at a multi-million-dollar tech startup or a local salon in Ohio, the fundamental rules of cash flow, leverage, and growth remain exactly the same.
It makes you appreciate the sheer grit it takes to run these businesses that keep our local economies moving. It is a reminder that behind every storefront we pass on the street, there is an owner managing a complex financial engine, trying to balance the books and find the next growth curve.
It really does. It is the quiet engine of the economy, and analyzing these deals gives us a window into how those gears actually turn. If interested in additional details about this Stark County tanning salon, our listeners are encouraged to contact Transworld Business Advisors of Canton for an NDA to learn more.